Tonight on Straight Talk, the American dream harder to reach.
Generally, if we don't have more housing option and better affordability, our communities will not be able to thrive.
With uncertainty in the market and buyers facing tough choices.
We have politics, we have tariffs, we have so much going on in the world right now that makes people think twice before they make a big commitment, which is buying a house.
We sit down with housing experts to break down what's really happening in the housing market and what's driving these conditions. But first, Oregon's chief economist on the forces shaping the economy right now.
And in fact, one of the key takeaways from the forecast this time around was the potential for an economic inflection coming into view. In other words, a reacceleration of the economy.
And what it all means for you in 2026. Hello and welcome to Straight Talk. I'm Stephanie Domerat. In focus this week, Oregon's economy in 2026. If it feels unpredictable right now, you're not wrong. From inflation to interest rates and tariffs, a lot of people are wondering what happens next. So where are we headed and what does it mean for your wallet? Joining us to help us answer those questions, the state of Oregon's chief economist, Carl Riccadonna. Carl has more than 2 decades of experience forecasting the global economy, working for Deutsche Bank, Bloomberg, and BNP Paribas. Now, his teams have consistently ranked among the top economic forecasters in the country. Carl, thanks so much for taking the time and joining us today.
My pleasure, Stephanie.
It's a big thing to unwrap, so we appreciate you offering your expertise. I want to begin with when you briefed lawmakers in late 2025. You said the Oregon's economy showed important resilience last year. What did you mean by that?
Well, 2025 was a challenging year, to be sure, for the national economy and also for the state economy. But the point of resilience was really with respect to recession risk in the economy. And I know a lot of forecasters last year were very concerned about recession, and some of them went so far as to forecast a recession, which ultimately did not transpire. So the economy has muddled through. And we can see this in lots of measures. Here in Oregon, it looks like the labor market has hit a turning point where we've seen some months now of positive job creation, not distributed across all sectors, but especially in the service sector. And also, from my perch down in Salem, I can see the trends in tax revenue. And tax payments are a good real-time indicator of economic health. If we're in a healthy economy, tax payments are generally rising. If we're falling into a recession, then we would see both corporate taxes and also personal income taxes tend to fall into negative territory or decline. That has not been the case. So that's been an important real-time barometer for us over the course of 2025 to watch these tax payments and see that it is not behaving in a pattern that is consistent with economy and recession. Instead, we are muddling through, and I suspect in 2026 we may see some reacceleration.
Okay, well, yeah, we'll talk more about what we're expecting ahead, and definitely good news from last year. Lots of fears last year and talk of recession, as you mentioned, and a big story also last year was tariffs. Their worry that they would hit Oregon businesses hard and consumers. So looking back, how did that actually play out here in Oregon?
Well, the tariff rates were changed multiple times over the course of the year. And so if we remember back to Liberation Day, as it was called, on April 2nd of 2025, they were very high tariff rates that threatened to push the economy to stall speed, where we kind of lose enough forward momentum that we could fall into a recession. Ultimately, the tariffs were delayed and diminished relative to what was initially proposed. And what ultimately went into effect certainly is raising a lot of revenue for the federal government through taxes on imports coming into the country. Those
which is what tariffs are.
Which is what tariffs are. Yep. And so that has raised a lot of revenue. It has slowed the economy to some degree, but not nearly the extent to which most forecasters were anticipating. That does not mean that it hasn't hit the manufacturing sector hard, both here in Oregon and also nationally. The manufacturing sector has definitely struggled in the last 12 months or so. That being said, we're in kind of a bifurcation moment here where we can see the service economy, private service sector in particular, doing well and maybe reaccelerating. The manufacturing sector, I won't say it's further deteriorating, but it has been a tough run as manufacturers are adjusting to tariff policy, reorienting supply chains, et cetera, et cetera. It's been a tough year. Maybe as we see some improvement in the service sector, that might pull the manufacturing sector along with it, but that's still an open question for 2026.
So speaking of manufacturing, Trump's goal when he implemented these tariffs was to have more manufacturing in the U.S. and to bring goods made here in the U.S., increase the amount of goods made in the U.S. If that, plays out and works in the way that he hopes it would, what would that look like? How long would that take?
Well, the funny thing about tariffs, you get all of the pain up front, and then any economic benefit you see comes a little bit later on in the process, right? So you put tariffs in place and immediately you see some price pressures in the supply chain. Sometimes it gets passed on to consumers, sometimes it doesn't get passed on to consumers. And that was a big mistake that a lot of forecasters had in 2025, thinking it all just gets passed along to consumers. And in a lot of instances, foreign producers will actually reduce their prices so that the price you're paying for a pair of sneakers on a shelf at your local retailer doesn't change in the face of tariffs.
And that's what we saw?
And well, we saw some pass through to consumers, but not full pass through to consumers. And there were important lessons from 2018 in the first Trump trade war, if you'll call it that. And we did not see that big inflationary impulse in that episode. And so that was a kind of a key learning for this time around. Now, the tariffs are much bigger in 2025. And so, it was unavoidable that some of that got passed on to consumers, but it was not the inflationary shock that a lot of forecasters were anticipating. So as we kind of look back to your original question about what this looks like, so we've kind of gotten through the worst of the price impulse, and now we're kind of paying very careful attention for those signals of the silver lining of tariffs, which is the onshoring of production. And we can see in, for instance, the Chinese export data that Chinese imports into the U.S. Did decline. So tariffs did do some of what they were intended to do. But it takes time for that reorientation of supply chains. So if you're a manufacturer and you need to build a new factory, you didn't do that on April 3rd of 2025, right? It takes a long time to procure land and make the investment and construction and all of those things. And so we're now in the phase where we're watching for that kind of second order benefit from tariffs. And in some industries where there was a lot of spare capacity, motor vehicle production, for example, we did already see, to add a third shift at a vehicle factory, you don't have to, build a new factory, right? You can just, get the personnel in place and ramp up production. Now, unfortunately for Oregon, we don't have a lot of vehicle production here, at least passenger vehicle production. But you're starting to see some signs of that other side of the tariff coin play out in the economy. I think that's a key focal point for 2026 and the rest of Trump's term.
As far as automotive
and other manufacturing.
Interesting. Okay, yeah.
Other
so
manufacturing
wait and see.
as well.
More to develop there. Right. Well, we did just learn this week the Supreme Court did not make a ruling on the anticipated case regarding the legality of President Trump's tariffs. This is a big case a lot of people have been watching. Can you remind us what is at stake there and when we could expect a decision from them?
So about half of the increase in tariffs is on trial at the Supreme Court for the moment. And so there's a big legal question about whether the executive or legislative branch sets tariff policy. And so the president, a lot of the tariffs imposed are under the Emergency Economic Powers Act. And that is what's being heard at the Supreme Court. Now, the administration has already broadcast that if that is ruled down or ruled against the administration, they will try to re-engineer the tariffs through other channels so that the effective tariff rate doesn't change, just the means of getting to that effective tariff rate would change. So it will be disruptive for financial markets and manufacturers and whatnot as they have to once again adapt to a new slate of tariffs. But it will be more status quo compared to where we were last April when this was truly disruptive to financial markets.
Interesting.
The other side of this coin, if they don't re-engineer those tariff rates, is a potential financial disruption. I don't want to say shock. That's a troubling word.
Yeah.
It could verge on shock. But tariffs are paying for a big share of the tax cuts which were passed last July. If tariffs are overruled by the Supreme Court, suddenly there is a much bigger price tag on those tax cuts, which means the U.S. Treasury has to issue more debt. That could put pressure on interest rates, and that impacts everything from your credit card to your mortgage, your auto loan, the cost of businesses borrowing, and that could be problematic for the economy. So it's not just a quick read of, oh, the tariffs are gone and that's good news for the economy. Yeah. There could be a kind of unintended second consequence that we need to pay careful attention to.
Because the Trump administration is sort of banking on this structure that has now been established.
Absolutely. Banking is the operative word there, where tariffs are a tax. Not necessarily paid by consumers, sometimes paid for by consumers, but it is raising significant revenue, which is helping to pay for those tax cuts from last summer.
Interesting. Something else this week. President Trump, of course, a supporter of using tariffs, he has said many times. This week, he also
said... His favorite word in the dictionary. He said.
Tariffs, yes, exactly. Big fan. This week, he said that any country doing business with Iran could face a 25% tariff. So that's a lot of countries, including China. What impact could that have on Oregonians and consumer pricing here?
Well, in terms of the direct impact with Iran, Iran has faced such heavy sanctions for so many years that there are very few U.S. entities that are doing business with Iran. So that direct channel, I don't think will be very disruptive to the U.S. as a whole or to Oregonians in particular. The second order impact, which is then those businesses like China, for instance, which are doing business with Iran, that could be more disruptive to the supply chain. But it seems to be a very fast-moving cadence of developments in Iran, and I don't know if this will endure long enough to actually see what an extra 25% on Chinese products or otherwise would be. And it looks like foreign trading partners are taking this seriously and potentially pulling back.
Okay. Well, let's look ahead now as we begin 2026. How does the state stand right now? You talked about it a little bit at the start of the show and moving ahead into the year.
Sure. Well, I think a big focus is going to be the labor market. And we had a poor start to 2025. Towards the middle of the year, we started to see some signs of stabilization, some flickers in the labor market with a positive month here or there of job creation. The unemployment rate continues to rise in Oregon. It's 5.2%. That is lower than the average over the last 25 years. So it's easy to say, well, we've gone up so much since the pandemic, but it was truly an exceptional period post-pandemic where the economy was red hot. The labor market was extraordinarily tight. And so this is some rebalancing, some normalization. Now, it's not equal across the economy. So certain sectors are doing better, services versus manufacturing, as we already discussed, for example. But we're starting to see some improvement there. In the national labor market trends, and Oregon can't be divorced from what's happening nationally.
Absolutely.
So if the national economy is showing signs of reacceleration, it's going to pull Oregon along with it. And so nationally, we've seen the unemployment rate actually edge lower over the last couple of months. So this is, again, just a couple of data points. So it's too early to say a trend, but it could be the beginning of a new trend where the labor market is kind of stabilizing as the economy is reaccelerating. And so this, I think, is a very critical narrative for 2026. For most of the pandemic period, post-pandemic period, each year has been slower than the year before it because policymakers were putting on the brakes. Whether it was fiscal policy or the Federal Reserve with interest rate policy, we were trying to slow the economy down to rein in inflation. This has changed now. The Fed has cut interest rates considerably, almost 2 percentage points, and tax policy now is more supportive of the economy. So there are real reasons to think that 2026 is the year we break the trend, and that deceleration kind of levels out and possibly starts to reaccelerate with tax cuts supporting the economy, interest rates supporting the economy, and more stability on the tariff front. So you may not like tariffs as a business, but at least if you kind of understand the rules of the game and you're not seeing these big fluctuations in tariff rates, at least you understand the rules of the game and you can plan accordingly.
So a lot of the uncertainty is part of the problem.
Uncertainty is a huge tax on private sector activity.
Well,
so it looks like in 26 we're starting to see maybe this. If we think of a hockey stick or a check mark, we're starting to see that upturn. Now it's not off to the races, no concerns. There are very real problems in the economy in certain parts of the labor market. It's a K-shaped economy, meaning that some folks are doing quite well and some folks are not keeping up with inflation and facing a weak labor market. So it's not to have a rosy picture across the board here, but at least there are some encouraging green shoots of a pickup in activity for 26.
I want to talk more about the household reality of Oregonians and the cost of living for 2025. You touched on it a little bit. Those who are in middle income to lower income families, how are they impacted, and can they see maybe a real difference coming into 2026?
Well, we've had an affordability crisis post-pandemic with surging housing costs, whether it was ownership or renting. Inflation across the board has been elevated. We had some inflation data earlier this week, which shows that we are still not back to the objective of 2% inflation. We're running hot relative to that, closer to, let's say, 3% on the inflation side. And so households are struggling with these affordability issues. Now, energy prices have come down, so that should provide some dividend to households. But food inflation is still, high, and that's not something you can substitute out of, right? If the cost of a pair of sneakers goes up, well, I'll use my sneakers for a longer period of time or whatnot. Food is something you really can't substitute much for, and so there is still a persistent inflation problem there. And this slowdown in the economy that I've been describing has meant a slowdown in the labor market. It has meant a slowdown in wage growth, for much of the labor market. And so, what we saw post-pandemic, even though we had high inflation, it looked like workers' wages were actually outpacing inflation for a lot of that period. Not all workers, but on average. And the reality in more recent years with this kind of moderation in the economy, which was the goal of policymakers to slow things down, right, was that we saw that gap narrow. And so some households are still keeping ahead of inflation, but an increasing share of households are falling below and not keeping up with the rate of inflation. And so affordability is a dominant theme for 26, and it will continue to be problematic.
Okay, so even if we might be seeing that beginning of the curve of the hockey stick, it could still be a while for our families, our middle class, lower income families, to really feel it.
Absolutely.
Okay.
Absolutely.
We are out of time today. Carl, thank you so much for being here.
My pleasure,
I
Stephanie.
learned a lot from you. Appreciate it.
Sure thing.
Well, still ahead here on Straight Talk, we're going to take a quick break. And when we come back, local housing experts will join us to talk about the current market and what buyers and sellers need to know right now. Stay with us. And welcome back to Straight Talk. If you're trying to buy or sell a home in 2026, this market can feel hard to pin down. From interest rates to competition, what really matters most right now? Joining us today, managing principal broker Kari McGee with Living Room Realty, and Evan Swanson, a senior loan officer and financial planner with Guild Mortgage. Kari, Evan, thanks for being with us.
Thank you.
Thanks. Yeah.
Okay, let's dive right in. Kari, I want to start with you. Big picture, are we in a buyer's market or a seller's market right now in the Portland metro area in Southwest Washington?
Yeah, we are kind of in a transition period. So the answer is we have kind of a balanced market. For the first time in a really long time, we have been solidly in seller territory for a good 10, 12, 13 years.
Wow.
And buyers are having a little more leverage than they've had in a long time right now.
Okay, nice. That's good news for a lot of people who've been waiting to buy a house. So what type of house right now gets lots of offers and one that would typically just sit?
Yeah, they're definitely, my expertise is the Portland metro area, and there's definitely that Portland look, the cute wallpaper and the lovely open kitchen. That house is completely dialed, always gets a lot of attention. And then there's some other, important factors like location, size, just bathroom count's a big one. But location and property condition, we've just got the HGTV, perfect, ta-da, like it's done, everything's perfect when we move in kind of culture right now.
Okay, so get your wallpaper ready if you want to sell, maybe.
Yeah, cute wallpaper.
Okay, great. Well, what price range of houses is popular right now and is kind of moving?
Yeah, so it's interesting because we hear so much about the affordability housing crisis right now. And in December, most of a lot of the sales, 55%, were in that $300K to $600K price point, which was a really lovely counterpoint to this narrative that only really wealthy people with a lot of money can buy houses right now. That means first-time home buyers, downsizers, some investors were really active at the end of 2025 and successful. We had a nice little bump in closed sales, and 55% of those sales were that price point.
So that's good to know for people who are those first-time home buyers. There is a good amount of houses for people in that 300 to 500. What's the average price for Portland area right now?
Right now it's $612,000.
Okay, so there are still those houses under that range.
Mm-hmm.
Evan, I want to talk about rates, interest rates. Of course, that's a big part of buying a house. Right now, they're sitting in the low 6%. We've seen the mortgage rates go down slowly over the last year, and right now they're the lowest they've been in the last 3 years.
Correct.
Right.
Yeah.
So, what does that mean for the market, and how is that having an impact on sales?
Well, it makes a big difference, and it's not only that mortgage rates right now are in that lower end of that range, but the duration of time we've had with them. So, in the last 3 years, when mortgage rates have increased, or I would say normalized, they've oscillated between 6 and 8% over that time. There's been 3 or 4 other times where mortgage rates have come down to these levels, but for very short periods of time, like a week or two. So it hasn't given really buyers a chance to get approved and go shop for a home and go through the process. But what we're seeing right now is the start of 2026 is very active, and I think we've had over 110 days now where the average conventional mortgage has been below 6.5%, and that's really spurring demand.
That's great for a lot of people who want to buy. What do you tell people who say, I really want to wait till we get back to that 3% I've heard of before?
Might be waiting a long time. You know, from 2010 to 2022, the federal government was literally subsidizing mortgage rates. And of course, they were trying to respond to a problem of the housing crash where no one was buying houses. So what could they do? Well, they could subsidize mortgage rates to increase demand. And much of the reason we were in a seller's market for the past 12 years is mortgage rates were 3 to 5%. Well, that subsidy went away in 2022 and mortgage rates have since normalized. So unless the government elects to get back into the business of buying up mortgages on a large scale, we're probably going to be around this range.
This is going to be the good rate we're seeing for a while.
I think so. I think so.
Let's talk about the golden handcuffs, because that plays into that really good mortgage rate, and sellers didn't want to give that up. Are we seeing people finally get off the sidelines and putting their houses onto the market in that regard?
We are starting to see that. What everybody forgets is that life happens, and you don't always have control over that. So having babies, divorces, deaths in the family or in the relationship, you want to move closer to your grandchildren who are now in St. Louis. Like, all of those things happen that we don't always have control over. I think where we're seeing this golden handcuffs idea still play out stronger than for the rest of the market is that luxury price point, $1 million plus, especially the $2 million plus, where people have more money, they have the ability to wait things out and sort of have the flexibility to remodel themselves or to create what they don't maybe have. So we're still seeing that kind of situation, but we're also seeing a lot of those people who want to move. They are reaching out, they're talking to real estate agents to consider a move, and they're not willing to buy before they sell right now.
Yeah.
And that's a big change for that luxury market.
Let's talk about affordability. That's I think the word of the last year and going into 2026. For people who want to buy a house this year, there's a difference between maybe what they qualify for and maybe what they should borrow. What would you like people to keep in mind?
Well, I think affordability is better right now. And the example I can give, as you mentioned earlier, mortgage rates have improved by about 1% in the past year. So that's the equivalent of home prices falling by about 10 to 12%. In other words, if rates were still at 7%, it would take home prices falling by 10 to 12% to have the same payments. So homes are more affordable today. We really haven't seen a lot of appreciation in home prices in the Portland metro area the last couple years. So the fact that home prices are more or less flat and now mortgage rates are lower, homes are gradually more affordable. We have seen wage growth across the region. So it's not back to where it was clearly in the days when rates were 3 to 5%, but it's better.
We just have about 30 seconds. So
Okay.
for buyers out there, what would you want them to keep in mind this year?
There's no perfect house. and waiting to get closer to 5 or under 6, if that's what you're doing, is going to bring so much competition on the buyer front into the market. And it's really hard to buy a house in those really tough sellers forward markets.
And for sellers, what would you want them to keep in mind?
Sellers, I would say it's a process to get from A to Z to actually get closed. There's a lot going on for buyers right now, and getting something closed is different than getting under contract.
Okay. Great advice for both of you. Thank you so much. We're out of time, but it's great to have you on the show.
Thank you for having us.
And thanks for joining us. We'll see you back next week here on Straight Talk.